Unlike a primary residence, when a landlord tries to refinance a rental property and pull cash out, there are strict limitations and requirements. So in this episode from American Landlord, we're going to discuss investment property cash out refinance limits. This video is brought to you by realserious.com, where you can screen tenants 24 hours a day the easy way. While there are many different types of mortgage lenders out there, including hard money and private individuals, we will be focusing on the most commonly used mortgage programs, which are based on the Federal National Mortgage Association, also known as Fannie Mae. Most banks and mortgage lenders conform to these guidelines in order to be able to sell their loans on the secondary mortgage market. This enables them to free up more cash so they can continue to lend to other borrowers. So exactly how much cash can a landlord pull out of their rental property? Here's the most recent Fannie Mae guidelines. If you own a single-family residence that is non-owner occupied, you may use up to 75% of its value. So if your property is worth, let's say, $400,000, you could borrow as much as $300,000 against it. However, it's important to note that if you currently have an existing mortgage on it, let's say $100,000, you'd be responsible for first paying off the current lender, which would then leave enough room to pull out up to $200,000 in cash. That's not exactly accurate because you do have to keep in mind there will be some lender expenses as well as closing costs. Now, if you happen to have a multi-family property which has at least 2 up to a maximum of 4 units, then the lending restrictions begin to tighten a little, where you're able to borrow up to only 70% of the property's value. So a $400,000 property would then be limited to a total borrowed amount of $280,000, including all lender fees and closing costs. But don't get too excited yet, because it's not that easy. There are actually many additional underwriting requirements that need to be met in order to qualify for the loan. These include a minimum FICO credit score of 640 for 1 unit, 680 for 2 to 4 units, a total debt-to-income ratio no higher than 36%, cash reserves equivalent to 6 months of principal, interest, taxes, and insurance, a minimum of 6 months of ownership is required, and expect there to be a few other requirements based upon your own personal income and circumstances. So if you happen to have questions, we would suggest contacting your local bank or mortgage lender for additional information. And should you have any questions about being a landlord or tenant, or would like to support our free resources for others, please visit AmericanLandlord.com.